General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Okay, let's go on. Monday, the day that sets the tone. Monday, 6/2/25. I think Powell talked. Yeah, he did. No, I think. But he didn't say nothing. So that's that. He cracked a couple jokes. Powell's pretty good at jokes, actually. He has good stock market humor. How many tabs did I bring up? So I don't need this one. And I don't need this one. Manufacturing PMI came in red. 10 o'clock. It's interesting to see the market rallied on the bad news. So I'm wondering if we are entering the area where bad news is good and good news is bad. Jokes tomorrow at 10. So let me double check this to see what time it is. Okay, this is Eastern time. So 10 is 9 for me. That's good. It's going to be good for what I do. CME Fed Watch. So June 18th, I believe, is the next Fed fund rate. Or I'm pretty sure it is. So 95% no change here. But I'm watching July as well since we're so close to this one. And basically all the data this week is probably going to either lock in July or flip it. 95% chance of no change. 75% chance of no change for July. This is July 30. Earnings. No earnings this week. We do have one big one. This external hard drive is tapping my mouse. What's that? CrowdStrike. CrowdStrike is a big deal, but it's not NASDAQ moving. This week it's going to be Broadcom on Thursday, AVGO. Nothing to move the NASDAQ for Tuesday. Dollar on the daily. Why do I have this so big? Well, because I was having a whole conversation with Pine Script. Okay, we're down. Like, we didn't leave this range though, so this could be a sign that we're gonna play in this range. I still want lower. This doesn't need any new marks. Look where we closed to. This is Monday's candle still, yeah. I do want to see price come back here. I don't like leaving that gap. I think this is a failure swing to trap early sellers. I think we will push back up. And deal with that volume imbalance before we officially sell off. Today on NASDAQ, nice push down, nice up day. Where's the news at? I think it might be on 30 minutes or something. Yeah, it is. Powell speaks here. PMI pushed us up. Powell pushed us up. We're kind of in that 4-hour BPR area here. Either way, this is a beautiful push up. Beautiful push up for the day. I like it. I want to see a run on buy side liquidity and then look for sales for the trade of the week. Go to the weekly. We broke through this old weekly high here. Let's put this text on the left. This is beautiful. We broke through the old weekly high. We might be heading for untapped weekly failure swing liquidity. Let's mark the open price at this. Okay. Let me just keep that on the menu. Don't know what I'm gonna label it yet. Let's go to the daily. $20.25 open price. We're finally putting a body above this range. And this is that old weekly high. We can save that just on the weekly chart. And maybe just have this. I believe this is the first body to close here. Body closed above top. That'll work better. Current interval only. So now we got a body closed above here. We reacted at this order block, opened huge. This is a gap. We closed here and then we opened here. It's kind of big too, and we're leaving this area. We do have this whole weekly open price. We'll do this top right. First candle of expansion weekly. Expansion and reading balance. Hold on, wait. It needs to be all intervals first, then weekly. So this is an expansion that created an imbalance. So this will be a key level. Running this high does make sense. Does this daily fair value? Yeah, we still need bodies. This week is not balancing it. We could really go up to here too. As far as targets, we have to give credit to 50% of this. It's a lot of 50% lines, ain't it? Let's take this price off. and this level off. Here we go, add text. CE of wick, of daily wick. We can put prices on here because I need to see that price. Should I change the color? Maybe blue, light blue. Yeah. Okay, that looks like it's next though. So let's look here and put this below. Next on the menu is CE of daily wick. Let's go to the 4-hour chart. That does look good. We're still keeping this, which is whole weekly open price. Also, this is a gap. There's a few gaps. This is a gap. That's a gap. This is a gap. Just a bunch of gaps everywhere. Previous week's low is right here as well. Closed here and opened here. So this gap doesn't have no touches. We'll keep this right here since it's the high of previous week's new week open gap. Okay. Next mile marker. Yes, CE daily wick. I want to see reaction. When price gets here. Let's go to H1. Basically waiting for liquidity. Hold up. I'm basically waiting for liquidity. Raid. No raid. No trade. Now, where's the liquidity here? Okay, you can form fit, say session liquidity or whatever. This candle left this range. So I would want to see here to watch price. We get here, this will be enough time to start stalking, and I don't have to, because we might wick here and then just sell. And if I see an alert and I'm not already waiting for it, I could miss. We can get a big displacement. Jolts should be pretty good. Employment's doing pretty good right now. Alerts set right below last accumulation range. I want to be stocking setups above the highs. I want to be stocking sales setups above the highs. All right, that's that on that. Y'all have a good day. Peace.